Is the biggest real estate bubble in history about to pop? You came here for the truth, so let me unveil that for you. In today's video, we're going to answer just that. We are going to look at the absolute documented facts. I will give you what you need to know. None of that speculation. I'm going to explain it all right here. Stick with me. First things first, home prices hit a high in 2023. Limited supply continues to fuel gains. So if you look at it in any environment, you're going to have areas where real estate prices are quite excessive. Other places, it looks like it's more reasonable. And generally what we see are there times in which some areas, they got the good schools. They got, close to the, all the things that people want. Those tend to stay reasonably, sheltered from any sort of decline, meaningful decline. All right. But there are other places, for instance, those tertiary cities that did extremely well during 2020 because now everybody thought they could be a farmer. Well, they moved out into these places. They were buying these places up, and now their employers are saying, hey, you got to come back to work, buddy. So they looked at that and said, okay, well, that didn't really deserve to be $1 million considering it was just like 400,000 the year prior. We got a problem. So there's a very mixed bag. Let's just keep that out there in the open. National single family inventory. So always separate single family homes from others, okay? Because when you're looking at it, I think it's a real big difference. Single family is that sought after when you go to the nice neighborhood with a good school, safe, all that stuff. And you can see here for yourself where the inventory is certainly off that bottom that we saw, but it's still not super high. So when you don't have a lot of inventory, you're, of course, going to see prices that are kind of sticky at this level where we had seen prior, which is too high for most people. Now, people aren't selling. Okay, we know that. Listings, while they have come up maybe, these people are not selling as they were before. So as soon as they say, well, you know what, I think it's a good market, we're going to see more inventory come in the market. It's just like people are just waiting. The U.S. housing market is slowly thawing, but 91% of homes are still overvalued. This is according to Fitch. You heard me right. 91% of homes are still overvalued. And you could base this on different metrics and so on, but just think about it, all right? Just think about it for a second here, where we have overvaluations in the stock market. We have overvaluations just about everywhere. And yet, does that mean that prices are coming down? Not necessarily, okay? It's not necessarily the case. Is it a bubble? I believe so, yeah, of course. Of course, prices of homes shouldn't double. In some cases, they were doubling in 1 year. That's obscene. We've never seen anything like that before. National Bank sees delinquencies for its variable rate mortgages rise to pre-2020 levels. So there is a problem here. It depends on the bank, depends, the lenders dealing with issues. Subprime is probably always going to have more of a problem than prime. You look at it, okay? Still, when we talk about mortgages compared to like credit cards, compared to the other things, there's a lot lower delinquency there as of today, as of right now, okay? Pulling that data from the Fed. Mortgage and identity fraud rise in Canada as economic pressures mount. My goodness. Okay. And it's being done on purpose. Hey, don't worry, you can't qualify. Don't worry. Let me hook you up. I got a friend here. Let me, he's gonna make sure that the paperwork looks all good for you. Okay. That's a problem. Okay. When we see this, because you can't actually qualify, no worries. We're gonna fix that for you. That's the thing, right? And we've seen a lot of that. But all along, what's been sort of creeping up here is farmland values. This is the one that people don't think about because they say, I'm not a farmer. Well, you don't have to be a farmer to have some farmland. There's even a lot of circumstances where I've seen it in places where you'll have somebody that takes care of the land. They have a property on that. If you've got a big land, hey, look, take care of the land. You could stay here. It's all good, right? They could do whatever you want with it. you're basically just managing the asset for that person. That's the way it works. And this has happened in many cases for a lot of people for years and years and years and years. The property might have a small orchard on it. They might have some cattle. They might have this and that. And all that owner really cares about is that there's a patch of land there. If he ever wants something from it, he can go get it when there's a harvest, pick up this and that. But there's actually somebody there that could take care of it. Now, of course, it depends on the rights and so on. You got to know that person, the squatters rules, all that kind of stuff. But anyway, the point of the matter is that farmland, the thing that nobody wants to talk about, is slowly but surely rising. And I shouldn't say slowly because it is significant, but people don't think of it as a real, true asset because it can deliver to you in so many ways. Yes, they're, having a renter in your property. Let's say you bought a condo. Okay, I'm going to get a renter. I'm going to get some income from that. Sure, absolutely. But there's also the farmland. We should be thinking of all of these things. No question. We shouldn't put anything down. There's all kinds of different real estate. I love warehousing as well. Warehousing is something that's becoming a big thing because of, Amazon, logistics, really expanding and will continue to expand. This is just showing us that the prices maybe, they're not jumping like they were before, but they're still moving up. Okay, they're absolutely moving up in most areas. So I'm giving you the data. And what are we seeing here? We're seeing relatively low inventory. We are seeing mortgage rates that are still high. And if we do get a little bit of easing, more properties will come on the market and there's investors waiting to buy. I keep seeing this all the time. I keep seeing it. A lot of it in Canada, but I've seen it elsewhere where there's still that insatiable demand, seemingly, for these properties. They open up the gates and there's a rush of real estate agents, investors, and so on that are all looking to get in. I want a property. I want to get one. It's crazy. The behavior of this just chasing the prices higher and higher and higher. Office prices still need to drop 50% for housing conversion projects to work. So keep that in mind, okay? You can't just simply convert those properties. Oh, we're going to have so much inventory suddenly because they're just going to convert all these abandoned office towers or half-empty office towers. They've made it clear that that's not going to work. And if they do lose 50% of their value, you're going to be in big trouble when it comes to the lenders. The banks will be in crisis mode and they are going to start laying people off, and that could result in some serious issues. Another factor here that needs to be considered is some of these areas, in this case here it's Mexico City, one of the world's biggest cities, may be just months away from running out of water. So what I'm just highlighting here is that there are concerns. Think about all of these areas that are being built up where they can't even manage their own water. Not Mexico City, but areas in the US, for instance. That's a big issue. How are you going to grow? Okay. What about the energy generation? Where are you getting your energy from? A lot of places are the exact opposite of self-sufficient. This could create a major exodus from these cities. So be mindful of that. Inventory is a thing to watch. Vacancy rates are a thing to watch. But in this case here, what I'm trying to show you are the big overwhelming factors which could suddenly create a big, let's say, downswing in real estate. But it seems to be very localized. If there's that beautiful area, it's fantastic, it's been there for a while, and you've got these properties, they're renovating, you see all the properties in the area being renovated, there's schools in the area that are really high rated, things are overall good access to this and that. Those are more, I should say, less likely to encounter problems versus commercial real estate, versus areas that are generally not very nice, but hey, the price went really high, so it's not going to go down. It doesn't work like that, okay? It is a very, very different world, depending on where you look. If you want the details of this, look, go to my Compass course. I break it all down in there. Compass is themoneygps.com/compass, totally free. You can go to my playlist. I've got tons of videos in there. Go to the playlist on my YouTube channel. And of course, Finance Friday. I want to give a shout out to my friends in the Finance Friday crew. I want to say hello to you. Always appreciate the Finance Friday crew. Don't forget to go to the link in the description to read it for yourself. And, let me know what you think about that. If you have any questions, you can always reach out to me, okay? That's basically it. If you haven't already, hit that thumbs up button. When you do, you're supporting me. So I want to thank you for that. One more thing. What are you doing tomorrow at the same time? Well, come on back. I'll see you then. Take care.